Given the unprecedented amount of corporate debt issuance, both on the bond side and on the loan side, by definition, will the next distress cycle be bigger than the last? Or maybe the mother of them all?
It could be. You know, it depends on how disrupted the capital flows are and where the global economies are. It's hard to say. I mean, that's just one piece of it. But you know, why the financial crisis was so great was that you just had this enormous constraint on global liquidity. Hopefully we won't encounter that again, and we'll have a more normal environment so that I think it's not simply a function of the size of the leveraged loan market. You need to look at, as I said, what kind of triggers there are with respect to that capital. You know, what kind of financial covenants and the like.
In recent years, the distress has been relatively isolated to energy, to retail, to healthcare, some technology. What other industries do you figure are vulnerable?
Well, there are some media companies. I know Clear Channel, and we've been involved in Clear Channel and Weinstein, for example. Shipping has been a very large source of activity for us globally.
Does it look like anything's poised to be next?
We look at transactions and the leverage associated with those transactions, and looking at that lens, healthcare, certainly there's been a lot of activity in healthcare. So I can tell you we're seeing companies that are having a more difficult time responding to technological changes within their industries. I would say certainly 30 years ago, 20 years ago, good businesses were probably more protected than they are now from new entrants. The disruptors are so substantial.
They had a wider moat.
Absolutely. And so that's why we like to stay on top of various disruptions happening across the industries we're involved in. So it shows us not only can we give our existing clients on the corporate finance side better advice, but it allows us to position where we want to allocate resources in the future on restructuring.
Are you staffing up in restructuring yet?
Yeah, we're always staffed up in restructuring because for us, as I said, it's part of our DNA. And so our restructuring group has north of 200 financial professionals. We are the largest group in the world in terms of number of financial professionals and revenue. Being public, we now see to a certain extent what our peers report on the restructuring side. Not all of them break it out. Some did. Now they don't. So we've always believed that there are restructuring opportunities across industries and geographies out there to keep our people busy. And the challenge for us is really, when you think about Houlihan now, and I mentioned we have over 200 financial professionals in restructuring, we have more than double that in corporate finance. And most of those folks have deep industry specialization. So the challenge for us is, as we look at what's coming down the road in a potential restructuring cycle, how do we continue to pair those industry experts and really good corporate finance bankers with our restructuring leadership to generate even greater market share than we did during the financial crisis. And you know, as I look back, we were drinking out of a fire hydrant during the financial crisis. It all came at once, and there were a bunch of deals that we were not able to handle because we just didn't have the capacity. We're in a better position now, given our more seasoned restructuring leadership. So that was 10 years ago, to take on more and pair some of our really great younger officers in restructuring with middle market corporate finance bankers across industries to take advantage of a greater share of restructuring activity. So, you know, I think in a more normalized, this may sound like a strange comment, but in a more normalized restructuring environment, if you look back, we did approximately almost $400 million of restructuring revenue. I mentioned we did $300 million or so each of the last 2 years. I think we can do substantially more, even if we don't, in some ways, we don't have a repeat of 2008. It's a more normalized, progressive recession. And look, we're a business that's 55% corporate finance and 15% FAS. I'm not hoping for a recession. I'm just a realist about how the world works. And
so that could be a $500 million business.
Or more.
Or more.
Yeah.
$200 million more than you made last year in that business.
When we made during the financial crisis.
Yeah.